Good evening, one and all. I, CA Saurabh Ajmera, welcome you in another exciting and very important session on valuation model of startup and case studies. So before we begin, I request everyone, please place their hand on heart for ICI motto song.
येष सुप्तेषु जागृति येष सुप्तेषु जागृति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यति कश्चन एतद्वैत
Thank you. Welcome back. So friends, being from same background, professional background of startup, one question is always asked by so many CA colleagues that how loss-making companies are getting valuation of $1 billion. So I want to say that it is depend upon the customer base, technology integrations, distribution channel, revenue, reputations, and so many other factors which are important for startup industry. So when we are discussing about the valuation, this is completely different from the startup valuation. So today, to understand all the scenarios, we have very learned faculty with us who have in completely industrial background. CA Jalaj Chhaya ji, sir, welcome you.
Thank you, sir.
And we have also with us one of the coordinators, CA Lavish Veda, and chairman of WRC Murtuja Kachwala will join soon. So first I request CA Jalaj bhai to start your presentations. Thank you.
Thank you. Lavish bhai, I can share the screen, right?
Yes.
Yeah.
Yeah. You may confirm once you are able to see it.
So before we start with formal completely presentation, I request CA Lavish Veda to introduce our learned faculty, CA Jalaj Chhaya.
Yeah. Thank you, Saurabh, for giving me that opportunity, and hello to Chairman Sir, Murtaja Sir, Saurabh ji, and CA Jalaj Chhaya ji. So when, as Saurabh bhai has said, that today we are going to get a in detail view about valuation modeling, and our learned faculty is here. I would like to introduce him and giving a brief about him. So CA Jalaj Chhaya ji has been a thorough industry expert within a very short span of time. He has worked with a lot of companies, currently part of Rishabh Software Private Limited, and has previously worked with Trafficker Global Services Private Limited, Nexus, Inorbit Mall, IOCL, and he is also a qualified company secretary, CGMA, SEMA UK, and Bachelor of Commerce, along with a fellow chartered accountant. Not the least, but he has also been has given presentation at various forums like Federation of Gujarat Industrials on insights of metal trading. He has given lectures on cryptocurrency basics at SEMCOM. He is empaneled in Board of Studies as a member of Symbiosis University of Applied Science, Indore. Has been a regular speaker there. Also been a visiting faculty in NMIMS, and Narse Monge Institute of Management Science, Indore. He has given presentations on cryptocurrencies, latest trends at various other colleges. He's part of Rotary Club as well, and awarded third prize for Rotary Global Essay Competition on Peace (ROGC) by Rotary Club of Katraj, Pune. He has also given presentations at Borivali Study Circle and various other forums at ICAI. He was also empaneled as in CA SLB for formation of accounting standard, empaneled as resource, empaneled in Committee of Finance and Investor Awareness Committee of ICAI, and likewise he has been part of so many various forums, boards, and teachings and universities and college, where he has given his immense experience shared with all the students. And likewise we are going to get few of that about valuation models for startups and case studies in the today's lecture. Jalaj Chhaya ji, I would like you to now take on and on the screen and yeah.
Jalaj bhai, over to you.
Thank you, Saurabh ji. Thank you, Lavish bhai. It was a great introduction. Always good to hear good stuff about yourself. So I know there are a lot of participants. I will not waste much time. Thank you again, Saurabh bhai, for giving me this opportunity. I will like to start my lecture, and I think let's do, if at all any questions, we can do it in the between ones and at the end ones. Though all are members, so it is not that my perspective or my knowledge may be more than someone. It is more about what I feel about the topic, and what have I researched about the topic, and that's how I'm taking it over. So thanks everyone for taking out time on a working day evening. I'm sure everyone has an own agenda, but I thank more than 100 participants who have joined to hear the lecture, to attend this session. First of all, I would like to start by saying that while I am speaking on this topic, valuation is absolutely about a perspective. Valuation, while there are immense number of methods, there will be research analysis, there are venture capitalists, there are chartered accountants across trying to find out the correct value of an enterprise, correct value of a share, correct value of a business. We have to always think the baseline of valuation is perspective and nothing else. For me, my perspective is an X company can be $1 million. Saurabh bhai's perspective can be $10 million. Likewise, Lavish bhai can say it's not even $100,000. So that being said, there is a lot of subjectivity in the topic. There are a lot of gray area which we might find it, but at the same time, people have designed across over the years experience some models where they can try to at least put in some common frame of reference and figure out a way as to how to value a startup, or for that matter any business. Okay, so I have divided my lecture into broadly, I would say, 3 areas. One is theoretical aspects of how a startup is valued, which you will find in multiple articles. Second is some important definitions which are used on and off as when we actually do valuations, and when we actually sit for negotiation. And third is some practical examples I have taken as to what are the current industry scenario and some startup and how they were valued. So I'll start off with the first part. There are basically 9 methods which it's said to be used for startup valuation, or any company valuation for that matter. First one is a Burkas method. So Burkas method is ideal for any company whose valuation we have an approximate idea that will be less than $2 million. There is no logic designed to it, or क्यों 2 million या क्यों 5 million नहीं, but it's just how it is. So any company. So when we look at valuation from a Burkas method, they think that any company is a box, and this box is divided into 5 criteria. So when you try to put up a startup which is pre-revenue, generally these are the 5 criteria you should be looking at, provided the entire valuation is more or less under $2 million. what is the sound idea? So uh, as we all are aware that any startup where we are trying to value something is to come from an idea, because established companies have asset liabilities, a lot of long history. Startup is mostly about the idea, the technology, and what the person is trying to bring into the system or the ecosystem. So one criteria is look at the sound idea, what is the basic value you can attach to it. Second is prototype. Is there a similar technology available? Is there anything, any prototype we can see? Or no, is there a sample ready for the idea, or it is just an idea and it has to be developed into a product? Third is quality management team or execution. Look at the founders team. Are people who are proposing the idea, are they technically sound to do so or not? So I will, for example, if someone is coming to you with a startup idea on, let's say, a laundry development system, then you have to check the history or see the founders. If they are into laundry, are there any connections for them into laundry business, or it is an extremely new venture for them? That also attaches a lot of credibility with respect to. So, for example, if a chartered accountant comes and proposes something on financing or taxation, okay, you may check his background and see that he has fair idea. But if someone from engineering background with no idea about taxation comes with a startup, then okay, you need to double check, or you need to go more detail into it as to how he plans to execute it. A strategic relationship, go to market strategy. How is that we are proposing to go to market with this idea? Are we having a plan? Is it a mass market idea, or is it a niche idea where we can focus on only specific type of customers? And product rollout sales strategy. So these five boxes gives a broader idea. We can attach value to each of the boxes basis our perception, basis our analysis, research. And if the overall value is under 2 million, we can have a broader value basis this criteria. It is ideal for mostly pre-revenue startups. So it will be very initial that the revenue is negligible. Second method when we talk about is risk factor summation method. So this is just an add-on on Burkas method where there are 12 risk variable attached, and you have to again put value to each of these. So I'll just list down the 12, and I'll list down the 12, but I think at some or the other level, when you are due diligence or when you are sitting for a valuation, we do keep these steps in mind, just that we don't specifically put a number attached to it. So let's say, for example, if you are evaluating a startup for investment, or if you are evaluating a startup to invest, या आप इस साइड है या आप उस साइड है, either ways you are evaluating this. What is the management risk? How stable are the founders? What is the stage of business? Is it, of course this is applicable more to pre-revenue startup, but even in pre-revenue, is it at a very nascent stage where it is just an idea germination, or has there been some work already done on it, and we are closing on the final product? What is the political risk? So for example, uh, are we going into an industry which may be regulated by any politics or any policy affair at a political level? For example, cryptocurrency related. So if we see uh, a classic example I would want to give you is, if you guys have been into crypto, I'm sure so, and you are investing, or you are suggesting someone to invest, there is this company called Vault, VAULD. It's a US company, and it has started in India, allowing people to trade similar to Coinbase. Now, when cryptocurrency fall off the cliff and RBI directives were not clear with respect to wallet payments, they have stopped giving INR withdrawals to customers. A huge loss to people who were invested. So already cryptocurrency is falling off the cliff, and these people have stopped giving withdrawals, which probably they have a authority to do so considering their terms and condition or considering the political matters going on, but they have filed a petition with RBI and government and stuff which is going on. But yeah, when we say political risk, this is something we have to see, that what sector is a startup targeting and how much it is exposed to such a risk. Then there is manufacturing risk, sales risk, capital raising risk. Are we going very capital incentive where we will do multiple rounds of funding, and if so, are we competent enough to do that? Competition risk. Let's say you are entering a crowded market, and there are bigger players already there, and there are a lot of players already coming in. How much do we see that risk? Technology risk. Are we into a product or a service which will make obsolete very fast? Are there already people working on the next level? I would say so. Next level of technology, 5G for an example. Of course, 4G had a decent run, and 4G still continues to go on. But with 5G coming in, 4G will eventually become obsolete. 3G तो अब कोई शायद use ही नहीं करता. Litigation risk. Now, are we entering an industry which is prone to more litigations? For example, something like a real estate sector where, okay, if everything is not proper on paper with lesser digitalization than other sectors here, are we entering in a startup or a valuation model where there is a lot of litigation risk? International risk. Are we into, let's say, an industry where there is a lot of forex exposure, and or where there is a lot of exposure which is, I would say, which is decided by foreign factors more? Like if you are into commodity industry, for example, I was a part of commodity industry for 2 years. I would say Indian events would not affect us more than the macro events would. We have for a 2 year period only seen how Europe and USA works, and India was a very small part of, though we did the India business to $1 billion, we really did not see how India is performing. Our entire risk was associated with metal pricing moving across LME. Our all I would say parameters are based on how LME is moving, how forex is moving, because LME decides your LME would decide your, I would say, metal pricing, and forex would decide your INR exposure. So international risk is also a big part. And reputation risk. Okay, who is attached to? Are you attaching yourself to someone who may not have a good reputation? We can probably not give a value to each one of these, but these are the factors we need to keep in mind before deciding. Scorecard valuation method. Now again, this is an add-on the risk summation method, where now you start assigning weights to the overall success of the project. So if you take an entire project and divide it into 100% weightage, and then assign different weights to factors such as these, you can come out with a valuation. So for example, team capacity. If you are building any product which is tech driven product or IT based product, you need to have a huge team. आप कोई भी आज प्रोडक्ट बना ले, जोहो बहुत सारे प्रोडक्ट्स बनाता है, you have 100 people team. Policy Bazaar, while you know it as an insurance business, people do not have idea that they spend hundreds of crores just to manage their back end team. So what's your team capacity? How strong is your team technologically, etc.? What is the product technology readiness? Is the industry ready for your technology? You may be way above. So I am not saying that the other way around, that we are behind technology. There may be an idea which is way ahead of its time, or which may not be adaptable at this point of time. I don't think in India, if 20 years before something like Tinder would have come, people would have appreciated something like that. But yeah, currently as we grow more towards the westernized culture and as the youth population grow, something like Tinder is working at an enormous growth rate. So you could not imagine it 20 years ago. So yeah, your product, is it ready for the current market scenario and going in future? What is the market size you are targeting? You may be an excellent product or service provider with respect to what you are building, but is there a market size available for it? Are you trying to create something generic or something niche? If you are trying to create something generic, there is a huge target market. At the same time, there is a huge competition in the crowd. At the same, if you are trying to do something niche, you have to be sure you are successful, because if you cannot go through the niche, your product becomes obsolete and okay, not favorable for anyone. Finally, what is the competition we are looking at? So this is just an example of weight I have given. This weight can be attached depending on what type of startup you are trying to value. Comparable transaction method. So yeah, I would. So what I'll do is after this slide I'll try to show you a slide of insurance sector which I have done analysis personally. I can obviously not name the startup for which we were trying to fund, but this is the most common method adopted by all. So comparable transaction method is nothing but you are basically comparing yourself with someone similar in the industry and discounting the other factors vis-a-vis yours. So for example, if uh, I would say if you are a startup in a retail environment, then your key success criteria is number of outlets. Let's say you have 100 number of outlets at the average capacity of 1000 square feet. So that takes us at 1 lakh square feet. Now you want to value yourself as a startup or as a company. You will look at a major retail segment having maybe 1 million square feet in a similar size cities. Look at the risk appetite and of course adjust your risk adjustment. I mean, you will risk adjust your percentage accordingly, but you will have a broader comparable transaction idea. That okay, a million square feet had a round of investment in a similar industry in the similar cities at X million dollars. If I discount myself, I am a smaller player. What is my valuation coming to? This goes across for different sectors in a different way. For a company which is into medical stuff, they will or a research medical stuff, they will have to say how many patents they have filed. Or if someone is into tech, they have to see how much active users are there. If someone into SaaS, they have to see monthly recurring revenue kitna aata hai. Now, this being said, I'll go ahead to the slide where we were trying to do something for an insurance broking industry. Yes, as you must be aware in general reading, insurance is picking up largely in India. If you see the trajectory of growth, we have hardly 4 to 5% penetration from a overall population perspective. And post-COVID, insurance prices have hiked, and people have become more aware about insurance. Overall, the country is growing. So insurance sector has been growing at a very large scale. However, we did not have, apart from bigger couple of players or 2, 3, 4 players, we did not have so many brokers. So insurance broking has picked up a lot so that people can get facilitated. And I'll like to show you. Yeah. So this I will come to where I got this data from later. But if you look at this data is publicly available in a software, which I also tell you the name. It will be very useful for the people or chartered accountants who are into startup industry, into M&A deals, that they can get this data. These are listing of the recent deals which were, and again, this is the deals which were disclosed. So there is a chance that company may not want to disclose a deal which is anyways out of our hands. So barring that, this is a and generally, I mean, 90% of people do disclose deals because आपको balance sheet में से या valuation factor से कहीं मिल ही जाएगा. There may be some sensitive cases where people will not be willing to disclose valuation. That's anyways out of our hands. So coming back to this is the insurance broking deals which have recently come in. And if you see, these are the dates when the investment happened. Who was the target? So let's say Marsh India, Mahindra, IFCO, Tokyo. The deal value is in $1 million. How much percentage? What is EV by EBITDA? So this is where I want to say this is the most important factor which we all try to gauge. I'm not saying this is the only factor, but yeah, for most of us who are into making deals of a company which is already in existence, this is something we look at always. What was your EBITDA versus EV model? If you are generating a EBITDA of $10 million, what is it that you are valued at? Sorry. Yeah. So if you see, what is surprising is the range of EBITDA. The range of EBITDA is 12 to 94. Now, how is it possible? 12 to 94 is a huge gap. So I will explain, because we have done some more research into this, is why EV to EBITDA is 12 for some big company like Marsh India, and Secure now it is 94, because of the growth perspective. So when you invest in a bigger company, so for example, if Flipkart now goes to raise fund, and of course it's taken over now, but or for example, someone as big as Amazon, if he wants to raise funds, uska EV by EBITDA multiple comparatively lower hoga basis its growth, unless it's growing exponentially high. So EV by EBITDA is generally discounted to a level where आपका growth कितना fast हो रहा है. It is not one way. You cannot say that okay, biggest company are giving 15 EBITDA multiple, उसका 100 का EBITDA है, 1500 का rate है, तो you are a smaller company, you should be giving me a valuation much cheaper than that. That's the perspective by which we try to negotiate. While for negotiation it's fine, the most important factor we see in here is what is the potential of growth. So Secure now may have raised this at a very early stage where it can see that मैं 100 से 200, 200 से 400 तो ऐसे ही पहुंच जाऊंगा when I enter the market. Hence, he has been valued at a higher EBITDA multiple, while Marsh India already has a huge scale of business, 1500 crore revenue at least in only commissions. Hence, the possibility of it growing immediately to, I would say, 10 times this size is difficult. It's already a foreign entity entering India with FDI norms. It already has bigger clients. It has its own policy of not going into individual retail or smaller clients. Hence, its growth is going to be limited historically देख के. इसीलिए what's more important is when you are doing startup valuation, we will find these type of crazy numbers. When you see, oh, 70 multiple, ऐसे कैसे हो सकता है? ऐसे हो सकता है. I'll give you some examples where there are the multiples are, I can't put it even in a number. It's infinite, no, on a actual scale. Yeah. So this is coming from a software called VCC Edge. This software has a subscription based model. We can subscribe it. It's not extremely costly though, but yeah, I think a charge is not. Give me a sec. Lavi, just give me a sec. Sorry.
Yes.
I think there is something issue with my charger. I'm full charge. Let's see if it we run in between. So yeah, not deviating off topic. So yeah, this is something which will give you a fair comparable transaction idea. Okay, whether you should invest or not, what type of industry. If you are, for example, if you take Policy Bazaar, while Policy Bazaar people assume it's an insurance industry, it's not an insurance, it's a tech industry. It's giving you options. It does nothing to do with insurance. The back end, it takes insurance from somewhere else. So their investment in heavily tech will let you know how it valuation should work. Or someone who has an extreme high marketing budget and going to go all in, he will have a much more valuation in terms of growth than what generally we would be expecting. Yeah. So if you go to this VCC Edge software, you will find these kind of details as well. Just have a look at the details and do see if it is making more sense after this data, if we can make a deal. While most of that may be publicly available, this gives a consolidated number. Baki otherwise you can take all the balance sheets and download it. Yeah, I hope everyone had a good look at it. So this is more of giving you information on a one pager or details of this is just I've taken one page. There are 100 line items of every insurance broking company there is available. So they give you a comparison of how EBITDA has grown over the years. You can then discount it as per your client. Do you see your client? Yeah. Yeah, okay. Someone has written my voice is echoing and bouncing. Is it correct still or it's coming okay?
Now, okay, sir. It was
Okay,
written
good.
earlier.
Got it. So So when you look at this picture for a 10-year perspective, you get to know कि 10 साल में इंडस्ट्री कैसे ग्रो हुई है, पिछले 3 साल में कैसे ग्रो हुई है और लास्ट ईयर कैसे ग्रो हुई है. Then when you take a conscious call of investing in an industry, you will find out that okay, I am looking at a growth. The general industry is growing at 20%. I am investing in a new startup which may be able to grow at let's say 30%, and accordingly you can value your client. Yeah. So going back to our comparable transaction method, this is the most famous method which or most common method which we use, because we need a reference point. Even unfortunately now it is fortunate enough, even Saurabh bhai knows that we have a lot of data about startup, lot of data about foreign startups, comparable industries, discounting methods, but you may still not be able to exactly gauge that ye mera transaction is comparable. However, any data with respect to a same industry, similar field is possible. This is as good as I would say, this is as good as something you do in a listed entity. आप लिस्टेड एंटिटी में क्या करते हो? अगर आपको इन्वेस्ट करना है इन्फोसिस के शेयर्स में, आप इन्फोसिस के शेयर का भाव निकालते हो, उसका ग्रोथ देखते हो, उसका डिविडेंड देखते हो. आफ्टर दैट ऑल्सो यू आर नॉट एबल टू कम टू अ कंक्लूजन वेदर आई शुड इन्वेस्ट और नॉट. तो उसके बाद आप उसके पीयर टीसीएस का देखते हो. देन आईटी इंडस्ट्री ऑफ द हाई बिग साइजेस का आप एवरेज निकालते हो. वो एवरेज पी लेट्स से इफ इट इज 15 and TCS का P is 12, all other factors remaining same, it is undervalued. ऐसा ही कुछ हम comparable transaction method में करने की कोशिश कर रहे हैं कि I am growing at 15%, industry is growing at 12%, industry P is 25, my P is 12, 20, so I still have a scope to grow because मैं grow भी ज़्यादा कर रहा हूँ, मेरा P भी कम दिख रहा है. Hence, comparable transaction is most widely adopted method in general for valuations. Book value method, well, it's not theoretical or generally a startup valuation, but yeah, for a startup which is into this series B, series A type of funding, this may be a method which we can use. No one generally uses this because book value पे invest कोई नहीं करता आजकल. It's always market value or fair value, but theoretically speaking, out of the 9 method, this is one of the method which can be focused. It is basically a net worth of your company. Liquidation value method. Again, as a startup growing, we will not say that this can be used. However, from a practical scenario perspective, if you see, let's say India में or for any example, 1000 startup चालू होते हैं, 10 बहुत successful होते हैं, 50 थोड़े successful होते हैं, लेकिन there are 900 startup which will not make it to the cut, maybe not get a funding also, maybe at some stage they will stop being that startup. So उस केस में आप liquidation value method adopt कर सकते हो. While practical example इसका मेरे पास नहीं है because these are startup which will not be heard of. This will generally go at a liquidated value where a founder has tried to do something. He has invested his let's say 1 CR, product बनाने की कोशिश की, काफी grow किया, marketing किया, but at the end he could not make the cut. But he still has maybe a physical asset, an idea, a patent, maybe something which he has, a copyright, some product which he has already worked on till X level, but he could not take it to Y level. Some other company can take it to Y level. Considering all that, there is a very high chance that, product में उसके दम हो, but he may not got the right people to do it. Having said that, this is where you can adopt the liquidation value method. When the founder wants to exit the idea, we can just offer him something which is bare minimum required to go ahead. And generally liquidation value is not adopted for high growth startups or anything like that. It is more for auctions or bankrupt properties where it has to go on liquidation value. Discounted cash flow method, yeah, this is not interesting per se because this is what we have studied in the last 25 years, but yeah, this is still as resilient a method, as usable a method, and as I have not seen a single valuation where we have not taken this as a reference point. While we at the end, valuation is more of negotiation, convincing power of founder, cash power of investor, his idea about how long he is going from a growth perspective. If we look at it, discounted cash flow is always used as a base, or at least a comparable method, where we take the projection of cash for next in number of years, let's say 10 years, at a growth rate, which industry growth rate or committed projection growth rate, and discount it to a reasonable industry adjusted risk factor. And the value derived gives us a broadly fair idea of what the company valuation should look like. While seldom we have seen that this may never be the case, or no one will tell you that discounted cash flow पे किया था. This is still the most solid point to get an idea of how to start with. Let's say your client has no idea about how to value something, and he comes to you and say कि मुझे 10 crore रुपए डालने हैं. This is the proposal which has come in. The first thing which should come to mind is, apart from comparable transaction, which will be of course broadly research based, पहले सामने वाली कंपनी का ये डेटा बना के देखेंगे, you will still arrive at a value which will then be a foundational base to go ahead. If DCFF results are broadly very upside or downside from what comparable transaction is, it may call for further detailing, as we are not sure that why there is a vast difference. This is still used in normal valuation, projected valuation, and this is I'm not sure if you guys are into reading of more valuation book. This is very nicely explained at different points by this author called Ashwath Damodaran. And if you read his book, you will come to know that why this is still the most solid method for valuation, or at least in his view, he's a global master on valuation methodologies. Oh, I think there's spelling mistake. The first Chicago method. Again, the name may be, बहुत अच्छा नाम देने की try किए, but this is, I would say, this is a probabilistic method of valuation. So what we do is we take 3 possible scenarios. So for example, let's say we want to do a valuation for a company which may have a projected profit of $10 million. So we said that, okay, $10 million is your medium case scenario. Your worst case scenario, कुछ भी नहीं करोगे तो $5 million बनेगा, and best case scenario $15 million. And basis the overall estimate, research, your perception, we assign a value to it. We assign a probability to it. That 20% chances है कि कम करेगा, 80% chance या 70% chances है कि बहुत अच्छा करेगा, and 10% is optimistic. And basis this, we assign weights, and basis the probability and weights, we arrive at a weighted average valuation number. This again, we try to establish that along with other methods. Absolute terms में इस तरह valuation नहीं होता है, but it gives us an idea कि okay, so for example, I would give an example, not naming, that we had invested in this company recently, and what we did is we said that okay, their projection was extremely optimistic, and they said that okay, we'll grow double in next 3 years because industry is this, we are investing into this and that, stuff like that. We did an industry analysis where industry growth is about 20%, but he is saying I'll grow 100% in next 3 years. So we had taken his projection of reaching from 5 crore to almost, he is saying 15 crores in 3 years. So we had taken 15 crores EBITDA as base A, where he will be able to reach 15 crores as optimistic scenario. Then we discounted it to 80% as B, medium case scenario, and we said okay, कुछ भी नहीं करेगा तो ये 60% तो achieve कर लेगा for what he is claiming. That take that as case scenario 3. Out of all these scenario, we then did a weighted average that अगर case C भी करता है तो मेरा CAGR क्या बैठता है at the same multiple, of course, and we still found that it is making sense. So yeah, that's the first Chicago method. Okay, venture capital method. Yeah, this is more famous, I would say, or this is something which people are adopting because people are constantly now going to VCs and investors as to asking money for startups and ideas. So basically, when you go to a VC, even a smaller size VC or an investor, the idea is always, so while a lot of people invest for the long term, when you go for normal round of investment, the idea is कि अभी मेरे से 2 करोड़ ले रहा है, मुझे कितने टाइम में कितना पैसा मिलेगा. This, put it very crudely, this is what an investor or VC wants, that I'm investing 2 crore for 10% equity. When is my exit, and at exit what is it that I'm expecting? So while the research may be based on all the above methods we have done, industry perspective, a lot of research on the idea which we are trying to give, VC does of course have a certain percentage to achieve, because otherwise they are not as lucrative as it may sound. So mutual fund, if it giving you 15%, VC is a risky venture, so it should at least give you more than that. So considering all these factors, VC, what it does is it will say, okay, let's have a tenure of 5 to 10 years and see that I invest $10 million into it. What is my exit value? If my exit value is X and I invest 2 million or 5 million or 10 million today, what is the ROI I am getting? That ROI on an average has to be above the all other traditional and non-traditional form of investment generally provided by market, whether it be bonds, whether it be FTs. Otherwise, it will not make sense. So VC generally takes care of minimum ROI कितना होना चाहिए, exit strategy क्या होना चाहिए, what is the purpose, the perception of that venture capitalist. Then there are other criteria like venture capitalist के 100 million का fund है, तो it will be divided into technology, manufacturing, hardware, country specific, and उसमें से will be allocated a fund. So are they exposed to so much fund? What is the average they are already getting? Have they invested in a similar startup? Again, but that's from the venture capital side of it. From a valuation method perspective, they need an XYZ ROI to begin with. Okay, so these were basically the 9 methods of how to value a startup or a company. And on and off, whatever transaction we do, we have taken some portion of each method while evaluating a proposal, be it on this side or be on that side. अगर आप pitch कर रहे हो किसी को as a chartered accountant that take my company for $10 million, then you will be optimistic on that side, and you will be using growth projections, etc. While on the other side of table, you will be trying to discount it more. But either ways, at some point of time, we have taken this as a basis of our valuation, one way or the other. And while there is no proper perfect valuation model or valuation technique, a mix of all this, depending on where, how much are you investing, is the key to find the right valuation. As I said in beginning, we cannot really say that this is a $10 million company or a $100 million company, because that is my evaluation of that company, nothing else. For someone who is not into the sector, this may be a piece of paper. For someone who is into it, maybe $100 million company. But overall, if we have this methods aligned in our mindset, we can then look at a combined methodology where it is optimized for both the parties. Now I'm coming to the second part of my lecture, where I'll be explaining some terms which we are generally using now, which we keep seeing on and off. That okay, ये लोग ये बोल रहे हैं, या no, we keep on hearing such terms. Sorry. Yeah. So which are the terms we keep on hearing in papers and otherwise? Pre-seed funding. So this will take to the multiple rounds of funding and how we do those. So what is pre-seed funding? Pre-seed funding is the earliest stage funding where founding new company is extremely early in the process, and there is funds from family, friends, closed ones, etc. Pre-seed funding, maybe VCs can be invested, or pre-seed funding, maybe there may be bigger guys who are investing, but that is generally on account of a figure. So for example, if someone like me goes and opens a startup, my best shot is maybe my chartered accountant friends, colleagues, seniors, my friends, family, my connects, or some of my bosses who may know me and trust in me may fund me. But pre-seed funding में मेरे को टाइगर कैपिटल फंडिंग नहीं देगा, मेरे को सिक्वाया कैपिटल फंडिंग नहीं देगा. But we still have read news where we say that pre-seed funding में टाइगर कैपिटल या सिक्वाया कैपिटल दिया. What are those cases? Well, those cases are such where a big shot or an ex-celebrity figure or an ex-big shot startup figure is starting its new venture, where people have already seen that he has proven himself, and where he just has to go and say I am doing something, and he'll get it in a pre-series round. So pre-seed funding may a classic example I want to give you is Mr. Sachin Bansal. Sachin Bansal was ex-Flipkart, raised a lot of money, and he started his Navi Technologies, Navi mutual funds, and a lot of Navi insurance. If he goes to the market, even for a pre-series round, he will get money from the biggest VCs ever. because he need not borrow from friends and family. He is already a billionaire. But at the same time, he has already proven his ability to start and run startups, and that is why people have faith in it. That okay, pre-series maybe we can go ahead and do this. Next comes the seed funding. So what happens is pre-seed is just to get you kick-started. That okay, paise nahi hai, just make an app, make a business proposal, start doing something. But there are many potential investors which comes in the seed round where you have already proved something of a sort that okay, the product is promising, the venture is promising, there is a lot of traction in the idea, people are liking it, there is a lot of social media influencer, you have X followers, you have Y followers, you have YouTube views, depending on the model you already adopted. So venture capitalists, uh, angel investors, private HNIs, these people also participate in seed round funding, generally where they see okay, the idea has a potential, the guy has a potential good founding team, they have themselves invested let's say a crore bucks in themselves. So okay, they are not someone who are not trusting their idea. The good part about pre-series done by yourself is that people are okay ready to think that आपको सिर्फ दूसरे से पैसे लेके धंधा नहीं करना है, to put it very crudely. You have invested your own funds into it, you have gone all in or substantial portion of it, so you have also as much to lose from a business not working as the other investor. That's how faith and trust is built. That pre-series मैंने अपने 1 करोड़ डाल दिया था, अब now I have done some amount of work, I need more money. So that's when angel investors, smaller venture capital, HNIs come in. Generally, the fund round is there is a so the source is Investopedia. The fund round goes from somewhere $10,000 to about $2 million की range में normal venture capitalist normal seed round funding में raise करते हैं. Then comes this Series A funding. This is more or less the most, I would say, crucial series of funding which begins where already you have set up a product, you have got some sales. Generally, it's not a pre-sale round. You got some sales and you're growing at a very good speed. And the first round after seed stage is the Series A funding. So it's not possible to scale up your business without this round of funding. While you have got good venture capital, the bigger round will take you to the next level of business. आपका आइडिया अच्छा है, प्रोडक्ट अच्छा है, आपका बिजनेस एक जगह चल गया, एक रीजन में चल गया, scale it to national, scale it to international. This is not possible without a bigger round of Series A funding. Generally, now Series A fundings are done by the bigger venture capitalist or recognized venture capitalist, because you have proved, let's say, across 2 years, if you are, let's say, into a business of समथिंग सोल्ड बेसिस टेक, आपने टेक बना लिया, प्रोडक्ट बना लिया, अपने कस्टमर बेस थोड़ा सा बना लिया, you got reviews, feedbacks, you got a seed round where you can prove that okay, smaller people have invested in me, I have grown from 1 crore revenue to 10 crore revenue, now I need to go to 101, which is not possible given the resources available with me. So typically Series A then is a bigger round of funding where venture capitalists take interest in you and they invest bigger chunk of money, and that is where your valuation spikes. Most valuation spikes is seen in Series A funding. उसके बाद भी फंडिंग में बहुत पैसे आते हैं, but if you want to do it on a normal scale, Series A funding is the main when you get money, because यहीं आपका valuation 10 से 100 million हो जाता है, या यहीं आपका valuation रियल में grow हो जाता है, and this is where you get, I would say, your recognition friend. So I would like to give you an example or rather a thought process here. So Saurabh ji to काफी कुछ track करते हैं. You must be knowing this company, or if someone needs a valuation called company का Fundamentum. Fundamentum is a venture capital or a fund which is started by, backed by Nandan Nilekani. So I was having this meeting with someone from his team, a senior level guy, and what we have observed is that if a startup, so what happens is, of course, Nandan Nilekani doesn't meet everyone, and he has a certain threshold and criteria above which only we invest. But if some of the startups get a meeting in Fundamental, and even if the deal is not through, जैसे वो वहां से बाहर निकलते हैं, दूसरे 5 VC उनको फंडिंग देने के लिए रेडी हो जाते हैं, because this is an idea where Fundamental or Nandan Nilekani has shown his interest. Whether it will work out or not is a different thing, but it was interesting enough to pique his interest. So this is generally happening in Series A, where people evaluate option and say, okay, you have the capability to scale, you have the technology to beat other stuff, you have the idea which is maybe working in a crowded market or a niche market altogether. So this is done mostly Sequoia Capital, IDG Capital, a lot of other venture capitalists are involved here. Yeah, I omit the subsequent round of funding. The reason being, all the other round of funding are just names. So Series B, Series C, Series D, Series E. It's more of to get more money, get more valuation, or at certain point of time, you're obligated also to have these kind of funding to be put in across your portfolio. That okay, एक राउंड ही रेस किया था, अगला राउंड कब रेस कर रहा है, क्यों ऐसा करना है, बिकॉज सिकोया ने $10 million के वैल्यूएशन पे डाला था. Next round will justify a $20 million valuation. Though Sequoia may not take out the money, it is more of a validation, and it is more of fund requirement which you are meeting through it and justifying your valuation. This generally happens when the business is at a decent success level and either wants to validate their success for a valuation perspective, or okay, let's pick up $50 million invest in a new series of products or expand into newer markets. While they can easily raise the debt, they do not want to go for it, and they want to continue this model where the investor will get tincture. Maybe सीरीज सी में सीड फंडिंग वाला निकल जाएगा, या प्री सीड वाला सीरीज बी में निकल जाएगा आफ्टर डाइल्यूटिंग अ सर्टेन स्टेक, बिकॉज हिज ROI is achieved. Generally series C, series B में hedge funds are invested because they feel okay, there is a lot of growth potential, let's, this guy is still growing at 40%, let's invest 5 years and let's exit. Private equity firms are interested. The people who are, I would not say risk appetite, but yeah, not as much as someone in the past series of round. This is already a successful model, and now you are seeing a growth and you are investing, but at a higher ROI than what the market is giving to you. This is the reason for which already proven business model लोग पैसे डालते हैं, भले रिटर्न कम मिले, but सीरीज ए जितना रिस्की नहीं होता. These are already quite successful businesses, and you keep on reading here and there that okay, series B fundraise, series round C में इतना valuation, etc. Yeah, startup incubation. Now this is a very different and new concept, and this concept is picking up very, I would say, it's picking up in India very nicely, and something which India should be doing it otherwise also. So what is a startup incubator? It is generally a collaboration designed to help new startups succeed. आगे की definition technical है. I'll tell you the practical side of it. So let's say you have a wealthy investor but a very conservative guy. उसको पैसे नहीं डालने हैं, उसको पता नहीं 50,000 के ऑप्शन आ रहे हैं, कोई इंश्योरेंस से आ रहा है, कोई टैक्स से आ रहा है, किसी को रीसेलिंग मॉडल करना है, किसी को मैन्युफैक्चरिंग करना है. ही इज नॉट श्योर होम टू बेट ऑन, and he's a very conservative guy, but you have a lot of land parcel, a lot of buildings available. So what a startup incubator essentially does is, let's say he calls for 30 entrepreneurs, and 30 entrepreneurs give them their ideas. He likes all of them at some level. He will give you a bridge or a platform to facilitate your idea, for which he will be taking something from you. So for example, incubator generally is done by public and private people together, or NGO type log bhi karte hain, but now people are doing that in other models also, where I have seen people, let's say for example, if I have a huge building, I am not even half occupied, I can give my rest of building to 10 different startup idea guys. ओके आप अपने 5-5 बंदे यहाँ बिठाओ, वर्क स्पेस लो, इंटरनेट लो, मेरे लैपटॉप यूज करो, मेरी टेक यूज करो. आई एम अ टेक कंपनी, आई विल गिव यू टेक बैकग्राउंड. आई एम अ मैन्युफैक्चरिंग कंपनी, आई विल गिव यू सम मैन्युफैक्चरिंग मटेरियल, and I'll give you all this for 10% of equity, 5% of equity. Shall you succeed? Now what happens is, not everyone is lucky enough to get startup funding, seed funding, pre-seed, or even have their own idea. For if I today leave my job and do a startup, I will have difficulty just to pay my EMI, let alone get investment for my any startup idea. So a lot of people, as I said, up to 1,900 startups go here and there. So where do they go? They should go to something like this, an incubator, where people will say, and because you're betting on an idea which is nascent, premature, and not tested, हो सकता है 10 में से 2 ही काम कर, बट आपके सामने रिस्क ये है कि आपका खर्चा ज्यादा नहीं. You are giving a facilitating model, providing workspace, mentoring, training, the services which is already available in your system. पूरी बिल्डिंग में 2 फ्लोर है, 2 फ्लोर पे इंटरनेट बैंडविड्थ लगा के लैपटॉप देना, एक HR का बंदा रखना, एक ट्रेनर रखना, have a constant watch, discuss more ideas with them, give other facilities if possible, so that for a startup guy, a fresher like me, who will just go and be able to use those resources, 10 में से 2 बंदे भी काम करके rest assured your cost will be out. And at the same time, people get that entrepreneurship inside them, that okay, not necessary everyone has to be a rich guy to start off something new. You can simply start off even by doing a concept like this. Go to a place, go to a co-working space, and just give it a shot. There is this site called INC42. Please refer to it. There is a list of incubators which are listed on that. N number of incubators now in the system. Okay, this is a simplistic term, but लोगों ने बड़ी complex बना रखी है. Pre-money and post-money valuation. They'll call what is a pre-money valuation. Pre-money valuation is nothing. Pre-money valuation is a valuation of your company before you raise the funds. So, for example, a company raised $10 million, and after $10 million, company का valuation $20 million हो गया था. That means pre-money valuation $10 million, raised $10 million, post-money valuation is $20 million. It is as simple. And unfortunately, speaking to a lot of people or a lot of even investors, I see कि pre-money कितना था, post-money कितना था. It's simply a technical definition. Pre-money valuation to determine how much company worth before I invested my money. Post-money is after I invested. This is the company's value, and from here I have to see what is the growth I am seeing. So that's extremely simple and nothing complex. Pre-money is before and post-money is after I invested. Okay. So this coming to this is only one example I have taken, but I have taken this because this is something which is very upcoming. So what has happened is of late people have started becoming conservative, and the reason being just a second, Lavish. Yeah. Okay. So what happens of late? What have happened is while there are a lot of entrepreneurship booming in the country, there are people who are taking unnecessary advantage of it. The reason being, सबको पता है कि अभी मैं पैसे डाल रहा हूँ, नेक्स्ट राउंड में मुझे निकलना है. द मोमेंट आई बी एबल टू, आई डोंट नो हाउ टू पुट इट मोर सोफिस्टिकेटली, मुझे किसी को चिपकाना है और निकलना है वैल्यूएशन. दिस इज द आइडियोलॉजी आल्सो व्हिच हैज कम अक्रॉस. अच्छा आइडिया कुछ लेवल पे ले जाओ, 2 करोड़ में ले जाओ, फिर आई डोंट वांट टू वर्क मोर, 2 करोड़ तो आ गए. So what happens is the founder, or I'm not saying this applies to all, but the founder has this philosophy कि मेरे 2 करोड़ आ गए तो मेरे जीवन भर का पैसे निकल के आप जो करना है करो. And I had only convinced to the extent कोई मेरे को 2 करोड़ रुपए डाल. And since the startup wave has come across, people are willing to invest. So what happens here? What happens here is uh, you cannot simply invest in the equity share because it's too risky. People try to adopt ways of other investments कि मैं किस तरह invest करूँ तो मेरे पैसे बचे रहेंगे. At the same time, the party is accountable also to grow. So there was this discussion I was having with someone where he was saying that okay, a startup comes to me, an idea guy comes to me and says that look, I am at 1 lakh rupees revenue. You give me 10 lakh rupees, I'll reach at 50 lakhs revenue, and your valuation will spike by 50 times. Now what happens here is he is coming with an idea. I am trusting and investing in him. So for this, of course, I am having a risk, but I also want to see that okay, if he is not able to reach at X level which he has committed, and he is not even able to reach half of that, or if he falls by marginally very high number for which he has committed, because idea is his, tech is his, मेहनत भी उसकी है, मैं सिर्फ पैसे दे रहा हूँ, बट मैं पैसे देने का रिस्क ले रहा हूँ, तो व्हाट इज माय प्रोटेक्शन? इट शुड नॉट बी दैट मैंने उसको 50 लाख पे वैल्यू करके पैसे डाल दिए और अब कंपनी आधी हो गई तो मेरे 25 लाख डूब जाए. Because that the motivation for the founder to work will not be there. You are taking an equal amount of risk. The founder has to take a higher risk than you. That's the idea. That's the idea behind which I have come across this concept, or everyone has this CCPS. People have now started investing in the CCPS where they say that okay, I want a compulsory convertible preference share subject to certain conditions being attached. So what you do is you invest in a preference shares technically at a pre-money valuation round where आप बोलते हो कि इतना मेरा इक्विटी में कन्वर्ट हो जाएगा अगर, and then the conditions go. So I will get an X amount of dividend for 5 years. If your valuation of the company, if your sales, if your customer base or XYZ whatever was committed falls below this range, then my equity conversion will be higher. तो मैंने 5% इक्विटी पे 5 करोड़ रुपए दिए थे, आप मेरे को फिक्स अमाउंट ऑफ डिविडेंड दो. अगर आपका वैल्यूएशन या आपका कस्टमर बेस या जो कंडीशन हमने अटैच की, इफ इट फॉल्स बिलो दिस, compulsorily this preference share gets converted into equity share, but not at 5%. Now it converts at 6% because you have fallen below that. So I am getting a higher equity percentage because you could not meet a certain criteria you had committed. So that's where the risk, I am trying to pass a portion of my risk to the founder, where only commitment doesn't work. He has to fulfill on that commitment, or he's penalized in the form of equity on account of that. That okay, अगर मैंने ये नहीं किया तो मेरी और 1% इक्विटी चली जाएगी. Shareholder agreements for a private company are vast, structuring. आप उसमें कुछ भी डाल सकते हो. Subject of course, it's not an anti-regulatory affair. So these kind of conditions people are started to put in. Preferred stock क्या है, common stock क्या है, with and this is generally also convertible to that 5%. But if something is not achieved, it can be converted to as low as 6% or 7% depending on their condition. So when structuring a transaction as a chartered accountant from this side also, we should try to see that okay, let's try to make our investor more secure, and if we can adopt something like this as an investment, it will be a great option. Yeah. So this this is not an exhaustive list, but this I have tried to cover factors to be considered while we are trying to do a valuation. So you can just go through it, and then I'll be discussing one by one. Yeah. So what are the factors you should be considering while you're valuing? And this is now becoming common as startup are trying to teach these approaches. Cash burn and tenure. When I say cash burn, it is basically there is a concept called CAC, customer acquisition cost. Why you are having a cash burn? You are having a cash burn because your customer acquisition cost is very higher. आपको Zomato का एक बंदा पकड़ के रखने में you are incurring so much cost that your cash is burning. You are on a negative cash flow. Hence, you have to keep on raising money till the time you turn profitable. Higher the loss, higher the valuation is a concept by these people. This is because your customer base is so high that अगर आप 10 रुपए लॉस से 1 रुपए भी प्रॉफिट में आ गए तो your recovery rate will be faster. When that will happen is a conscious call, is a estimated call which we have to take, that कितने tenure में ऐसा होगा. Scalability. So is your industry specific or generic? क्या आप ऐसा प्रोडक्ट और ऐसी सर्विसेज बना रहे हो जो सबको यूज कर सकते हैं, अमीर गरीब, एनी लोकेलिटी, एनी गाय, और इज इट एक्सट्रीमली जेनरिक? So if you take something like Tata 1mg, which has now almost achieved, I think, a unicorn status, well, it is more दवाई लेने वालों के लिए. Paytm is generic to everyone, from a guy, पान वाला से लेके a billionaire, it's generic. So what is the nature of your industry? What is the scalability of your industry? It's a very specific, it's a very generic. Competition from bigger companies. So are you entering a space where already bigger companies exist? मैंने सारे नाम लिखे हैं. कार देखो, True Value, OLX Autos has come up in a big way. So when OLX Autos has come up, they must have analyzed this, that okay, there are already bigger companies in the space. Am I able to drop their valuation, get in a big way or not? This is very important from a perspective that okay, bigger companies can just draw you out of business by the sheer fact that they have much more money to burn than you. Investor credibility. So is who is basically your investor, or who is the guy who is is it a big guy or no? That's where we see that. So, yeah. So for example, as I gave you the example earlier, Navi Insurance or Navi Technology, Navi Mutual Fund has picked up great. Now it has terrific services, I know, but the way it picked up, it is not that it was coming up with an idea which no one had. Yeah, it is giving something special which no one has. So that's not it. It's purely because Mr. Bansal has invested in that, and he has a track record of running a big company. whether you're going in an online or brick and mortar system. So, physical asset exposure. Pepperfry, if you see, Pepperfry now started opening stores. Why? Just to pick the marketing presence rate. Pepperfry online works, and आप store में जाओगे तो भी online ही बेच रहा है वो, आपको वही दिखाएगा जो site पे दिखाएगा. But okay, your investment, is it into a complete online model? Is it into a brick and mortar model? Brick and mortar में ज़्यादा पैसे लगते हैं, time ज़्यादा लगता है, constructing something, leasing something. Online is faster on a compared to that. Disruptive technology or crowded market space. Are you entering something which is going to disrupt the sector entirely? It may be anything from fintech industries trying to disrupt the banking system, crypto trying to disrupt the currency system, or are you entering into a crowded space where, okay, for example, you are trying to enter a space of project time management कि हम लोग ऐसा कोई tool बनाते हैं, उसमें there are companies like Zoho Books who are already into that space and at a big scale, but उसका demand भी big है. So you want to enter into a space where there is big demand, big supply, or something which will disrupt the entire and move to your technology. Sectorial analysis. What is the current sector which is in boom right now? I have mentioned insurance broking. If you guys are working with metal trading is also into a boom zone. People are trading metal in India up and down. SMEs are forming. Uh, MNCs from foreign are entering India. Comparative data. Okay, this is, we already went through this. I just named the software. I know there may be more softwares you may be aware, which will give you a lot of data and insights into comparisons of the similar nature of companies. Does it solve a problem or is it a convenience product? MyGlam, Nika, are these solving a problem? No, these are convenience product. A luxury product, make good feel factor product, despite they have jumped in the market, and at a crazy valuation. At the same time, if you have a problem, is it solving that? So what is the concept behind the idea on which you are valuing something? Is it very generic or is it specific? Or is it solving a problem, or okay, it's a good to have product? Geography catered. Very less people are aware that इंडिया में भी ऐसे स्टार्टअप है जो एक्चुअली बाहर ही केटर कर रहे हैं, लेकिन उनका वैल्यूएशन इंडिया से ही मिल रहा है. देयर इज दिस कंपनी कॉल्ड पार्ट्स अवतार. इट केटर्स टू, I would say, auto parts mostly in Canada and now in US. Because इंडिया में ये सिस्टम इसलिए नहीं चलता क्योंकि इंडिया में we are not accustomed to do our thing our own selves. हम लोग कभी पाना पकड़ लेके अपनी गाड़ियाँ जनरली ठीक नहीं करते. We have mechanics for that. But if you go to foreign countries, they are knowing that they are trained to do that, even their own cars. Canada में when winters come, car breakdown is very, I would say, common. Parts Avatar is a company which gives devices, trainings, mechanic services also to these companies in Canada, but they have 100 people in Gurgaon and Bangalore as a back office, maybe for obvious reasons. But yeah, what is the geography you're catering to? Are you aware of the geography? India में बैठ के आप Canada का कर रहे हो, you should know the model. यही आप अगर इंडिया में replicate करोगे नहीं चलेगा. Exit strategy, IPO plan. A lot of people, and while it is not wrong or right morally or ethically, will tell you that my final plan is IPO. I need to increase my top line and go in public. This is simple. So with that eye in mind, you can say that you are entering in series A, इसका 10 गुना करके IPO में जाने वाला. What is the exit strategy? Is he going to give us exit in the next round, or you are in for the long haul? Are you a strategic partner or you are purely an investor? This factor is also very important when valuing a company. मैंने अभी 2 करोड़ डाला पर मुझे निकल जाना है अगले राउंड में, भले 3 मिले. मैंने अभी 2 डाला, मुझे 20 करोड़ चाहिए. So what is the company's IPO plan? What is the exit strategy? Because at the time of investment, your exit strategy should be very clear. So this was my second part of presentation where I have tried to explain the different terminologies, what are the factors we should be considering. This gives a generic idea. There may be more factors, as I said, which you should to look at, but this is something common I can come across where whenever you see something, you see your competition even internationally and how things are. I am coming to the third part of my presentation where I'll take some example of companies, and these companies, how their revenue models are getting operated and how they have achieved valuation, etc. So an academy. So this company was founded in 2010. Until 2014, they had no other founders. One of the founders then again joined, and in 2016, till 2016, they were just running like a YouTube channel. Like हम लोग भी अपने YouTube channel चला सकते हैं. कल से मैं tax पे बोलने लगूँ, वो channel बन जाएगा. And getting regular views, good views. When they finally decided to launch an app and went full time into education, their focus was more of skill oriented exams like UPSC हो गया, railway हो गया, SBI exams हो गया, banking exams हो गया. So their focus and niche area was clear. where हम online education बोलते हैं, हम बायजूस भी बोल सकते हैं. बायजूस is more into competition like Akash education types, but these were clear skill based education पढ़ाना है जहाँ से job लगे लोगों की. COVID has been a boon for them. What happened in COVID is still COVID, not a lot traction was getting on account of, I would say, education industry for online models. But if you see the current statistics, they have 30 million users, 3.5 million paid users, 20,000 educators, and 1.5 billion YouTube views. Final SoftBank funding round valued them at $1.4 billion. Now, personally, if you ask me, I've seen this company. Maybe I've given some time interview also, and I have seen this closely. If you ask me again a perspective, it doesn't appear to be a $1.4 billion industry. Reason being, the market is quite cluttered, quite crowded. UPSC के private classes भी बहुत हैं. I don't think someone would want to take a railway job physical class छोड़ के online class. Second, it's a lot of competition from tech, while not in the same zone, but yeah, Upgrad, Byju's, etc. So online is getting more crowded. And third is the revenue models. The revenue models is not extremely easy to make. While you have paid users on a subscription base, you have to pay your teachers. Most of their model or revenue is coming from advertising, and spend is going on marketing. So till this is stabilized to an extent, a unicorn valuation may not sustain eventually unless this booms from here. Another example I have taken is Meesho. So this is something which has come up very big time. Meesho is, if I would put it more simply, it's something like India ka Amazon. What they are doing is they are just showcasing from their platform and using it as digital stores. You can go, you can sell your product, you can resell your product, but their target audience unorganized markets, unbranded products. आपको लैक्मे का कुछ खरीदना है, आपको एक्स का कुछ खरीदना है, अमेजोन पे जाओ, मीशो में मिलेगा, आई एम श्योर. बट मीशो टारगेट्स मोर ऑफ connecting more resellers and building their platform very strong. The only good part about it is they are targeting the unorganized sector, and in India 90% is still unorganized sector despite it. So I was in 5 years for retail industry. Despite seeing not less than 100 malls, well, personally there are 1,000 malls in India at least, but मैंने 100 malls India में देखे होंगे. All our surveys, meetings with directors, we only stated only 4% revenue comes from organized retail and 96% is into unorganized retail. Be it grocery against DMart Big Basket, or be it apparel as opposed to your local apparel store. So Meesho has targeted a very niche idea, or a very crowded idea where crowd बहुत उनको मिल जाएगा, because its listing is not even going to cost you. Only thing it's going to cost you is when actual sales happen. While Meesho also does not have to invest big time because they are giving digital platform, their services are limited to logistics, so they act as an intermediary. When you buy something from an unorganized retail store, Meesho does not buy it for you and sell it to you. वहां से 100 का लिया, 120 का लिया. The capital intensive. They are providing the packaging, the logistic, the delivery, and for which they are branding. This achieved a unicorn status, and since I have not mentioned and everyone is aware, unicorn is a company which is valued at over $1 billion. So that's a unicorn. India has about now, I think in this year only they have got 14 unicorns by now. The concept is similar to Shopify and Amazon, but at the same time, when you see Meesho, it's targeting much more crowd in tier 2 and tier 3 cities. उनका target Bombay, Delhi नहीं है. उनका target है tier 2, tier 3 cities where people are not able to organize or sell themselves. आपका राशन वाला आप ही से खरीदता है because वो एक area में सीमित है. If he gets a chance to get bigger, at least in 5 areas on the city itself, he may go to the next level. So the idea is fantastic, growing very good. The revenue model is broadly commission from resellers, delivery charges from customers. Till now, it is in losses and it is burning cash. For that matter, Zomato is burning cash. So all this logistics company, or they are burning cash with the expectation that there will be turnaround someday, and that is why they are getting huge amount of fundings, putting them in the $1 billion club. Okay, I'm not sure how many of you have heard about this. but this is an Indian startup, and this is the first startup which, or as Saurabh bhai rightly mentioned in no starting में, कि हम बोल रहे हैं कुछ कॉस्टली है कुछ नहीं कॉस्टली, बट वी ऑल्सो हैव टू सी फ्रॉम द अदर देन नंबर्स व्हाट इज द टारगेट मार्केट, कैपेसिटी क्या है, पोटेंशियल क्या है, साइज क्या है, स्केल क्या है. So this was founded in 2019 and is the youngest startup to achieve the latest unicorn status. It is a blue collar job hiring platform. So while we have Naukri and other stuff for white collar jobs where CA, doctors, engineers, lawyers, etc., and it's monster.com, shine.com, but not anyone or not a lot of people have attempted to do a blue collar hiring platform. आपके ITI pass, plumbers, electrician, mid skilled workers, everyone they are trying to bring it on a single platform by them creating their own resumes and then giving out to industry, because all said and done white collar job maybe constitute 10% of the top layer, 90% तो नीचे ही काम होता है. And by giving them more a tech savvy hired platform, and using AI in this, which they have not of course told it yet because they are not there yet, we'll come to know what is the wage parity, with the people can demand more, people becoming more tax savvy. There is a data which will come in the system. आपको आज मालूम नहीं कि अनऑर्गेनाइज्ड सेक्टर का डेटा कितना है ब्लू कॉलर जॉब्स का. We'll have a lot of data showing area wise कौन कहाँ कितने लोग काम कर रहे हैं. It will be an amazing experience if this turns out to be how it has been projected. So coming to my point, this company has at 100 million in last round, where they are valued at 1.1 billion at a pre-revenue startup. Pre-revenue is not zero revenue per se, but the revenue is negligible. And Tiger Global has put in $100 million. When led by Tiger Global, it was $100 million round, putting the company at $1.1 billion. The number is crazy in itself. It is facilitating 15 million interviews every month. So I want to ask you here, and I want to give you a minute to answer this. Why, as per you, this company is a $1 billion company? It is maybe it's a pre-revenue startup or it's a negligible loss-making company. Why is that people have invest? And you can probably write your answer in the chat box if you are allowed to. Why is this company a $1 billion company per you? If it's not, then I'm not pushing for you to justify it. But let's say if your answer is yes for it, please write your answer why this company has a potential to become a $1 billion company. And yeah, or I'm assuming Q&A में लिखे हैं लोगों ने. I am not checking it yet. That after the lecture is over, we can take up the Q&A. This is or a potential $1 billion company because there is a blue job collar market of about 300 million people. That's right, 300 million people looking here and there for blue collar jobs. So Tiger Global ने जब pre-revenue startup में पैसे डाले, so they have seen the vision and not a single number of the immense workforce and the immense data analytics which will come out of this. It's crazy how this valuation come, but yeah, the idea has been adopted, and would really love personally to see if this startup makes it to a much larger scale. It's an Indian startup, very. So here are the numbers for you. It's a loss-making company. Cash outflow is negative, P&L is minus, revenue is growing, but of course revenue growth has to happen for. So it's again a cash burn type of thing. But the concept, the idea is taking company to the next level. It's a 300 million. Look at the crowd market. Look at the approachable market. कि ये हो गया तो there is a platform much bigger than Naukri.com for blue collar jobs. You just imagine a scenario where a real estate construction company goes online and says, "Okay, I want to hire a carpenter or a labor," and he can interview the guy. There will be background checks. A lot of data comes in the system which was never existing in the system. मुझे plumber लेना है, plumber क्या rate पर है. Plus this will facilitate the wage parity from the other side of it. So you don't have to see only one way. You see the other side. आज हम नौकरी के लिए अप्लाई करते हैं. I go and type chartered accountant 10 to 15 years, salary range X. तो वो सैलरी रेंज में 25 कंपनियां नौकरी दे रही है. इफ आई पुट द सैलरी रेंज एक्स प्लस समथिंग, 5 कंपनियां दे रही है, विच देन आई सी दैट 5 कंपनियां कौन सी है. इट्स जनरली HUL, ITC, Goldman Sachs, which says कि okay, these are the companies I should be opting for if I want higher salary, because these people are the only ones giving a 10-year chartered accountant this much of salary, or at least giving the range. Imagine that happening in blue collar style. How will the parity move? So my focus on have noticed this. वहाँ पे आपको अगर maid plumber ऐसे लोगों को बुलाना हो, they will charge much higher than probably what your salary is per day. But if you want to, similarly यहाँ पे we don't give that much importance. That is why your poverty levels or your per capita income difference is so high. This will probably be a positive step towards that direction of, having more of consolidation for that. I think we have gone through this already. I would of course be sharing this PPT after this lecture to everyone, where where you have sources from where I have taken. Do follow Hurun, where they give out a lot of analytics. Apart from this, I also want to take a 2-3 topics which I have not kept on here. Do take a lot of advantages of company which are there, like which are policies which are there, like Startup India. It gives a lot of tax benefits overall. Individual state governments are also forming their policies to help people, I would say, facilitate more startups. Like government of Gujarat has currently come up with the ITES policy, which is helping IT sector grow to the next level, and making Gujarat a technology hub. And my discussion with the government guys, they are also making a startup policy which will facilitate more growth. Startup India is a separate policy which is facilitating more growth. There are events like VC Founder 100 Circle every week, every month, where people can come and pitch your idea. You can just go and pitch your idea, ask your valuation. There are concepts called crowdfunding, where people are happily, I would say, funding as low as probably 50,000. There is a website, and sorry, Saurabh, I could not get this website before time. I had noted it somewhere. This website has come up, where this website is facilitating the startup company to register themselves with the website and say, I want to raise 1 crore rupees. But people like you, me, or people like layman people cannot invest 1 crore rupee and a startup, but we have a ticket size of, let's say, 50,000. This 50,000 will, the 1 crore will be divided in number of shares, and you will get probably 1 share, 2 share, 3 share of that company, but you can still be part of that startup. This is how they are raising funds. Okay, 2 people, 3 people, 5 people cannot give me 1 crore. 10,000 people can give me 1 crore. Maybe everyone invests 100K, 200K, 50,000, 20,000, 10,000. I give them the equal equity allocation. And if I give them so, well, yeah, at least I am, so the individual also feels like I am a part of the startup journey. This is fantastic idea. And I think this will pick up much more, so that when the startup boom is coming, and in the 5 years to come, this should be it. With this, I would like to open the session for any Q&A, sir.
So before going to question answer part, let me check. Sir, Chairman sir, are you available?
Yes, Saurabh bhai, I am available.
We are lucky to have the presence of dynamic chairman of WRCCA, Murtuza Kachwalaji, with us. So I request him to address all the participants.
Thank you, Saurabh. So first, let me thank Saurabh, who is the chairman of the MSME and Startup Committee, for the excellent work that is being done. And Saurabh, really grateful, and round of applause for Saurabh as well. Thank you for such unique programs. Thank you, Jalaj, for joining us today, covering the topic in such great detail, and I'm sure participants would have benefited. And as we await for the questions also from them. Before, the whole practice area is changing drastically. And now there are so many entrepreneurs who are coming up with new ideas. And I think at every stage, valuation is required, and such an apt topic. So a person starts, I have known so many youngsters now, they start with 5-10 lakh rupees of their own source. Then they go to the parents and get some borrowings and then they start the work. But then they go for private placement. And again, you need to do the valuation to get the investment at each stage inside. And then again, when they go to the venture capital fund or PE fund, and when they go for the listing on the MSME and then to the main board, I think on the whole journey, and at each stage, be it writing policy procedure for them, be creating or telling them which accounting software or which operational software to use. I think at each stage we got a role to play, and there is enough and more opportunity which is coming up, and the whole startup space is really growing and active. Before I close, let me take this opportunity to inform all of you that the World Congress of Accountants is happening in India this time at Mumbai, and all of us at Mumbai, the ICI, the WIRC is hosting this World Congress of Accountants. The World Congress of Accountants is a marathon of accounting profession. It happens every 4 years. Last 4 years back was in Sydney. Before that was in Turkey. And India is hosting it for the first time in 118 years. And we are expecting 6,000 delegates physically, 10,000 delegates virtually, at least 2,500 delegates from outside India in physical form. And till yesterday, 70 different nationalities have registered. We are expecting 125 countries, people from 125 countries to come. The African countries, Ethiopia, Nigeria, Kenya, South Africa, like they've committed 1,000 participants. Australia and New Zealand committed 200 participants. All our international chapters from across globe will be present. And parallelly in our WRC building, we'll be running a session of half an hour each by each chapter. So like in case anyone from India wants to go and settle in Dubai, then what type of job opportunities are available? If they want to go and do practice, what type of job like practice opportunities, whether any additional qualification is required, whether there's an opportunity to outsource work from Dubai to India. So all of those questions will be covered by the office bearers of Dubai chapter. Similarly, London and all our chapters in the US, across globe, they will be here. And again, each and every accounting institute, be it Chartered Account in England, in Wales or CPA Australia, everyone is attending the program. I would encourage and request participants to please attend. For us as the Indian delegate in physical form, the fees is 18,000 rupees per delegate. If we register in a group of 5% discount. And if we register in a group of 20, then 5% discount continues. But on 20 registration, 1 registration is free. So I would encourage everyone to pick it up. Newer areas, the whole deliberation is going to be on trust and sustainability. And I don't know whether you've seen today, we circulated a brochure. Mukesh Ambani has confirmed his presence. We are waiting for confirmation from Gautam Adani. We are waiting for confirmation from the Prime Minister, and he himself will join us on the inauguration of the event. And lots of good speakers, international speakers, will soon be releasing all the session details one by one in the next 7 to 8 days as they get finalized. But looking forward to see you all here in Mumbai. And anyone wants to volunteer for this program, please drop us a text to either Saurabh, me, or any of the council members, and we would add you into the volunteers group, because we'll really need an army of people to manage such a big event. First time we are hosting something like this in India and by ICI. So looking forward to see you all, and looking forward to a lot of learning also. And I think this is one time where there is lots and lot of work which is coming into India, lots of manufacturing coming into India. So we got an opportunity to showcase our talent there at this conference, at the World Congress. At WIRC, the last thing, during this year, we are trying to do various different type of things and bringing various opportunities to the members. Be it international tax, we just finished a refresher on basic and the advanced. Be it a RERA or cooperative, we're doing a program, and on valuation, startup, MSME also, we're doing lots of programs. So wherever, whatever opportunity members needs to pick up, they can pick up and they can take it ahead. So with that, let me thank all the council members for all the good work. I also have with me in my room CA Gautam Blat. He is like vice chairman of the GST committee. And we just finished one program where we were conducting training for the GST department, the LTU, large tax unit. And there were today also 200 GST officers and staff members. And from July 12th till 14th September today, we did multiple training for them because they said they did not understand the service that much. They were very good in goods. And we got speakers from across India to speak to them on each industry, insurance, banking. So training the regulators. I think something unique, and the type of bonding that we built with them and the type of feedback which they gave us today, they were so happy. So I think a lot of action happening. Anyone wants to be a speaker, panelist, moderator, want to write something, you're all welcome. With that, thank you very much, Saurabh, for all the good work, and over to you again. Thanks a lot. Thank you.
Thank you.
Thank you, Chairman sir. So I recognize the presence of my council colleague CA Gautam Lat over here. Thanks for joining us. So Jalaj sir, now I request to take the questions.
Yeah.
So we
So,
have almost 10 to 12 questions and some suggestions over there.
yeah.
So Rajiv Shah question is related to is it a common practice that seller, capital raiser, also provide his methods used to arrive his demands value along with the projected numbers? This is the first question available on my slides.
Okay. Is it a common practice that seller, capital raiser also provide methods used to arrive at the demanded value along with projected numbers? So no, it is not a common practice. In fact, I tried to dig in a lot before this lecture. I had some lesser time comparatively to prepare for this lecture because of the CP regulations and all. But even if you go to any sites, any multiple LT, any unicorn, no one actually tells you what method they arrived to a valuation, because your number will never be matching a valuation methodology. It is just to arrive at a fairer value. So for example, if I do a DCF method of any company and I arrive at a valuation of 50 lakh rupees for 5% stake, or that's, let's just say company is valued at 10 crores, there will be a lot of negotiation happening and the settlement may be somewhere above that. So no one generally declares, capital raiser never declares what value, I mean, what methodology has been adopted. It is more of a reference point for us to negotiate and start off with.
So next question is views on Byju's valuation, sir.
Yeah, again, this will be personal, so please don't take my answer out of context. Byju's per se has grown drastically, but inorganically, it has paid huge sums of money to acquire newer companies, and recent development of Deloitte auditors, as well as Byju's ultimate idea was to list on NASDAQ, where you get exponentially higher valuation on account of dollars. And of course, US being a trillions of dollar economy, unfortunately that has come to a halt because of the new auditors telling a lot of financial irregularities. The idea was, or for me, Byju's I have closely monitored, is a bubble, but had it gone through the IPO valuation, this would not have come in picture, as they would have reduced their debts and other valuation factors. But now it seems extremely tough that they can maintain such a growth. And since you have mentioned Byju's, I'm sorry if you guys are following InShots, there is something which has come on InShot that they have just like before this lecture started, that Byju's has recorded a reduction in their sales. So they will not be probably sustaining this valuation, and there will be some or other bad news we may see going forward. Yes,
on Apna startups, these are just
correct.
message. So again, the question from Rajiv Shah on Apna startup: do you think Naukri.com cannot start blue collar segment on its already developed platform? So if you want to avoid any name in your presentation, you can generalize it. Okay.
Yeah, of course. So Apna.com was a unique idea. I think Naukri.com has been in the system for a long time, and this idea should ideally had occurred to them earlier, technically speaking. But so it's not only about developing platform, it's also about reaching out to the mass base. While Naukri.com is I would say it is providing more, जहां आपको खुद अपना जाके data upload करना पड़ता है. यहाँ पे Apna is also approach Flipkart, Zomato. They are already on their role for hiring people, because Apna has approached them where they have delivery boys, they have logistics guys, and they are taking interviews. So they have not only developed a platform, but they are also connecting data to that platform Naukri somehow has not shown any interest there, because this is also about data and not only about developing a platform. Uh, and that's why of course they can enter the competition, sure, not a problem, but yeah, Apna is currently way ahead with the numbers they are generating. It's a first more advantage, if not anything else.
So again, question from Rajiv Shah. Normally, what is the timeline for a startup to go to public? Any ballpark number? Your views on why Flipkart has not been successfully for IPO after so many years of good establishment? Am I audible?
Hello. I think, sorry, am I audible now? There was a network issue, I guess.
Yes, yes, yes.
Yeah.
You are audible.
So for a startup to go public, I cannot generalize a timeline, but I am looking at this company which is, and unfortunately I cannot name them, but they are planning to go public in 24-25. The idea of going to public, or whenever you want to go public, is threefold. One has to ensure, even when you are consulting a startup, and if they say I want to go IPO, you have to be very clear on compliances. So if you decide in 20 to 23, I want to do IPO, let's say 3 years to clear your books, to have bigger auditors or better brands on your books, to get top line aligned, growth aligned, ये सब करने में on an average 3 साल लगता है. Even for that matter, normal accounting standard, Ind AS, more presentations, more marketing, road shows, टॉप लाइन एक लेवल पे पहुंचने के बाद ही आपको प्राइवेट इन्वेस्टर भी पैसे ज्यादा देने के लिए इंटरेस्टेड होगा. I was part of, not a part, but I was working in Nexus Mall, which is a Blackstone entity. और वो लोग अभी रीट लाने वाले हैं, which is a public news. So yeah, so the planning of REIT I know has been happening for about 3 years now, and the entire back structuring of it, how to structure, what entity, what SPV to be created, etc. So I would say if you decide today, you should take at least 3 years to go public if you want to do it proper way. On Flipkart, I think they did plan for IPO, but after their acquisition by Walmart, if I am not wrong, I think they had enough cash not to do so. In fact, Flipkart in general created after Amazon, we had doubt that Flipkart itna nahi टिक पाएगा, but Flipkart still has such a user base. The cash crunch was never an idea, so I don't think IPO was a good strategy for them. Maybe they may rethink in the future if Walmart wants to push out.
Again, we have a question from Prakash Kukreja ji.
How do we decide on which method? Okay, out of the three can we use also? Can any okay? So Prakash ji, these are more of, so if Burkas risk summation or Chicago method, Burkas and risk summation are more of pre-startup method. Burkas is for the one where the startup is less than $2 million. So that is broadly clear कि 2 million के नीचे होगा तो ही look at this method. And other methods are also for risk summation, also pre-revenue startup. So as I said, you can use this method to arrive at a value, and then based your research, your idea, your comparative data, your analysis of the company, you can arrive at a valuation and go ahead. And no authority cannot challenge the methodology used for valuation. It's a commerciality of a transaction. You can invest 10 रुपए में $100 million या $100 million का 10 रुपए में बेचो. The problem will only come to authority when there is a tax loss or tax humongous gain received or gone, where you will have to justify why there is so much of loss. Let's say आपका book value 100 रुपए है and आप कहीं से कुछ खरीद रहे हो 10 रुपए में, and the guy is booking a loss of 90, the book value still being 100. Such kind of question can be raised by tax assessment guys, transfer pricing guys. If there is a regulatory arm's length issue होगा तो transfer pricing वाले बोलेंगे, but commerciality of a transaction can never be questioned by any authority unless it leads to a, let's say, tax issue, FEMA issue. Then they have their own journal to check in. But again, they cannot question why you have sold for 10. They can question if you have sold for 10, I am having a tax loss, so please justify. So I think that's the only problem there. After GAR coming in, there may be some changes where they can go into the agreement transaction, but I think that's a problem way far to be currently monitored or thought of.
We have more questions. I think so many questions, so we can select someone.
So what is the future of brick and mortar business? Will it ever get funding? So Chaitanya ji, if you are, I mean, if you get time, do read on the embassy REIT. India is trying to westernize its brick and mortar business, going into REITs and IPOs, and it has a terrific future. And REIT in which are the big things to go. Even Blackstone, Brooks, Fieldby, they are also coming with IPO. Mindspace Rise. So lot of brick and mortar liquidating into REIT concept, which is in USA a very developed concept. India is picking it up. So it has a fantastic funding model, just that we have to go there. Otherwise, domestic or regular traditional funding will never help brick and mortar business, because वो leverage का issue रहेगा.
So we have another question from Chandrika Mundra ji.
Bit more on pre and post money. So Chandrika ji, it's broadly a simple concept where if my valuation currently is $10 million and I raise $5 million from you, so my company is now 15 million worth. So pre-money is 10, post-money is $15 million. It's more simplistic कि पैसे रेज करने के पहले मेरा वैल्यू कितना था, पैसे रेज करने के बाद मेरा वैल्यू कितना है. That's it. Okay. Revenue, yeah, revenue multiples or valuation. I would say that generally EBITDA is a benchmarking which is taken, and when you go to listed entities, P is the benchmarking which you take for valuation. So revenue multiples generally should be, if you are going for a larger scale company, should be an average of multiples going in that industry. If you're going in a very high growth company, then adjust it and increase it by the growth rate. There can be no revenue multiples fixed, because there may be other structuring on EBITDA where you are a fixed asset heavy guy, तो आपका depreciation बहुत लग रहा है, maybe आपका tax planning बहुत अच्छा है, तो आपका PAT बहुत ही अच्छा आ रहा है. So I would say revenue multiples आप top line में देख सकते हैं, and look at the broader companies and the industry growing in general. If insurance sector is growing at 25%, your company has to grow more than that just to meet the multiple with bigger companies are making.
Some clarity on DCF method for a negative cash flow.
Yeah. So Sunil, honestly speaking, all the funded companies which are having negative cash flows, I don't think any of the bigger people have done a DCF to arrive at. It is more of the consumer base and the traction received. So अगर आपका DCF में negative cash flow आ रहा है, तो आपका share price actually तो अपना का minus है, Zomato का, Ola का minus है, Ratan Tata still investing in Ola. These kind of companies more into the number of scalability of users as to when they turn to profit. So for example, I have $10 million consumer base and I am incurring a loss of 2 rupees. The moment I incur a profit of 1 rupee, mera recovery will be extremely fast. So these industry are heavily, I would say, traction based, and they don't arrive at valuation basis DCF. They have to fund their cash burn to go to the next level.
So Suresh Keval Ramani is asking, can you guide us how to shortlist and approach PEVC? So this is again a practical questions.
Yeah, Saurabh Bhai is an expert here, but in my limited understanding, there are some platforms like I forgot the name. There is this VC 100 founder circle, and there are many circles where they give you. So Baroda is a smaller city, but every month we get this people who are coming to this circle where there are HNIs and bigger investors who come, and you pitch your idea. So I came across this interesting idea called Netflix for Bharat. It's a platform for regional languages. हरियाणा में एक बंदे को बड़ा दिल पे लग गया कि मेरी लैंग्वेज में कोई मूवी नहीं देखता, उसने यूट्यूब पे वीडियो डालना चालू कर दिया, 1 लाख व्यूज, and now he is creating in all languages and asking for a 35 CR valuation. So when I say approach, meet up such kind of investor, visit such conferences where PEs are there, where investors are there, people are giving you chances to present yourself. Do not have an approach that मैं सिकोया के नीचे जाऊंगा नहीं किसी के पास, सिकोया के पास तो पहुंचना is the next level. But yeah, there are some platforms. I'll try to get more details on number of platforms where you can approach these kind of PE, VC or angel investors.
So Ritesh Khandelwal ji asking role for intellectual property in valuation. How much premium weightage in valuation, assuming it provide a limited entry barrier for competition, as people can copy the idea with modifications.
So Ritesh ji, a practical problematic question, very relevant to technology. Unfortunately, while India has developed a patent system registering your patent, registering your intellectual property, litigation into this runs into years. So if you create something unique and go to market and someone copies it, I would say on a practical basis, there is very limited thing you can do unless the scalability is so high that it comes into media and all. आपने आज कुछ product बनाया, just go to market, register the patent. If someone is copying you, file a case against him. But till the time the conclusion of that case comes, we don't know what the business must have happened. So there is a limited barrier, agreed, for competition if you are creating something very unique, regulatory, technical stuff. बट इंडिया में लॉ इतना ज्यादा ऊपर नहीं गया है वेयर पेटेंट के ऊपर केस चल रहे हो इमीडिएट आपका रिजोल्यूशन आ जाए कि तू यूज नहीं कर सकता देयर मे बी स्टेज एंड ऑल बट आई वुड से दैट्स अ ग्रे एरिया व्हिच विल स्टिल रिमेन टू सी हाउ मच पीपल कॉपी अक्रॉस. भारत पे ने मतलब पेटेंटेड नहीं है बट भारत पे ने पेटीएम कॉपी करके 20,000 करोड़ की कंपनी बनाई है. सो दे हैव डन नथिंग न्यू. So I think it's more that you can be regulatory protected as much as possible, but still go on doing your business. You will not be able to stop someone copying, just that you should have your niche market and scalability.
So again, Kuldeep is asking something directly related to the name, so I avoiding it. Next question is Dharmesh Shangoi. Can you throw a light of terminal value for a startup, say at 5th year of business and has just turned EBITDA positive?
If he has just turned EBITDA positive over what years we don't know, but considering the calculation, you got to see from EBITDA positive how much he is growing and probably adopt the methodologies we have given an option. आज 1 करोड़ पे अगर 5 साल में 10 करोड़ है तो discount it to a XYZ rate and target your exit value. अगर आपका उसमें X investment है and आपको उसमें से Y चाहिए, multiply it by ROI and you will arrive at a broader number of what it should be. And if it is more industry which is having more data, get a comparative quotation.
So again, Kiran Hingeji asking, nowadays we have seen valuation like top line multiple, bottom line multiples. Yes, Shark Tank, we observed that how relevant this approach. So
Yeah. So since it's generic top, conservatively bottom line approach is always considered because मैंने भी आपको EBITDA multiple दिखा है, मैंने कहीं sales multiple नहीं दिखा है. But I have seen in many deals where sales multiple is given to us कि मैं 10 करोड़ सेल कर रहा हूँ, मेरा 100 करोड़ वैल्यूएशन होना चाहिए, नीचे तो कोई जाता ही नहीं. So that generally happens, top line generally happens when your sales is growing fast, your customer base and traction is very high. I would say when you weighing your options, and because assuming that we will not be doing Zomato or Ola valuation, we should take an average of top and bottom. Like top line is 100 crore and if your bottom line is 10 crore, compare it with other industry कि वो 1000 कर रहे हैं तो उसका 100 bottom line आ रहा है कि नहीं. You also got to see कि ऊपर से नीचे आते हो कि आप खर्चे कितने कर रहे हो. So while you see the top line approach, have an average bottom line number, and if you want to go more aggressive on valuation, you can get both the numbers and see where you stand compared to the other deals.
So again, which method is best to value SME road construction firm? From Ishan Shah.
Yeah, so I think this is a technical one. Road construction firms are typically capital intensive. Road construction generally also happens on government tenderings. So if smaller firm is there, it may have gotten a smaller patch of project or supplying something. So I think for this best value will be take the cost of material and futuristic growth, cement, etc. कितना बढ़ता है and put a factor to it to consider it. Not, I mean, you'll have to see because आपके scale में इसमें comparative industries are very less. Most of them are government oriented or L&T types. So you will not be able to gauge much data on SME road construction firms. But yeah, this will have more realistic picture if इसमें आपका ज्यादातर cost already है. Road construction firms कितना खर्चा करती है, कितना revenue लाती है, is a more publicly available data. So I would say take an average of multiple of similar industry, compare it with some big like L&T, some government companies, and then see where you stand.
In general, I want to add on that. Actually, in general, we are seeing that in construction industry, they have multiple orders in hand. So DCF method can be followed.
Got it.
So now we are moving to next question. How to value startup which develop software for algo trading?
Yeah, there is a lot of competition here. Algo trading has a regulatory problem in itself. So first of all, before you value a startup, do check if they're SEBI compliant, because a lot of apps have closed because they have not followed some compliance on algo trading. That being said, a lot of algo trading softwares are already been in development by small and big guys. Algo trading only works to an extent. If you see normal public in demat or bigger guys, only hedge fund, Goldman Sachs type people use algo trading as a reference point. I personally know maybe 2 people who have tried to use algo trading as a methodology in general. So algo trading software will not have a superb traction, but you got to see if it can be technically pitched to a bigger firm. So your valuation will only depend on who is ready to take that algo trading. Individually, an algo trading will have lesser valuation if you are able to pitch it to someone like Carvey, Goldman Sachs, who are ready to take it as a tool because they have thousands of algo trading. Then is when your algo this will spike. So this is purely on pitch model, and you can get a crazy valuation or a lower valuation depend on your target user base, and that will generally not be someone as simple as banks or individuals.
So again, Arpita ma'am is asking that is 15x of revenue a good valuation benchmark for a 3-year-old profitable D2C company?
I would say take examples of similar D2C companies, download the data and see what is the industry growth for the last 10 years, 3 years and 5 years. If it is close to 15x, and if a comparative deal has happened in that range for a comparable firm, आपकी 100 crore की उसकी भी 100, 200, 350 crore की है, and a comparative deal happened in 20x, 17x, then yes, it should be. Of course, assuming that the growth should not be less than 15%.
Hima Mev is asking that which method is advisable for valuing e-commerce startup deadline in handicrafts? Dealing in handicrafts. Sorry.
E-commerce startup dealing handicrafts. So yeah, this is I would say this is an unorganized market where you will not get a lot of comparative due to a comparable number. Honestly, some people have started organizing this handicraft handloom stuff. Someone like Misho will also adopt you. So I had gone to this digital conclave in Gujarat, which happened in last month, where there was a startup which was pushing for Bihar some handicraft stuff. Unfortunately, we will not be able to have any comparative data. So you'll have to just see the scalability and the demand for it, and if this can be marketed elsewhere. So for example, if your e-commerce handicraft of Gujarat mein bana rahe ho, is it a specialty available in other parts of India already? Is a factor to be seen. If आप साड़ियों का स्टार्टअप कर रहे हो, हैंडीक्राफ्ट में आप ऐसी कुछ चीज का स्टार्टअप कर रहे हो, इसकी डिमांड ऑलरेडी कम है, then the valuation will not be. If बहुत ज्यादा है, and if you can scale it up to India level, because handicraft India के mostly India में ही बिकते हैं from a valuation perspective. Foreign में इतना demand नहीं होगा, and the cost will also not make sense. So I would say for this should be something like pre-revenue startup or a smaller revenue startup. You can try to use book value plus something of DCF methods.
I think we have covered all questions as of now.
Yeah.
So I want to add one thing, that we at WRC is highly committed to empower our members through knowledge updation in various fields, which is need of the hours, and that active participation from the members is motivating us. Today also we have very good numbers in this virtual conference. So I'd like to thank each one of you for joining us over here. And it's really a big motivation for all of us to organize more and more programs for you. And I also like to thank Jalaj Bhai for spending their valuable times and guiding us on this topic. I believe that all the participants will get benefit in terms of future working and knowledge you have shared. Really worthful, highly insightful presentation from your side. So big thank you on behalf of WIC and all the participants joining over here. Thank you, sir.
Thank you, Saurabh. Thank you for the opportunity.
Good night.